There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Welcome out to the Trading Justice Podcast presented by Tackle Trading. My name is Matt Justice, along with my co-host Tim Justice. We have an absolutely amazing guest here with us on this version of the podcast. A very good friend, a coach and mentor to me. Jim Francis is here to talk to us about his story in trading, as well as many other topics. So we're going to get right into it. Jim, how are you today?
Hey Matt, hey Tim. Good to listen to you guys again. I always get a pleasure in spending time with you.
Hey Jim.
It's pleasure's all ours. Well, Jim, I kind of logged in here a little late, and I logged into you and Tim talking about the flash crash and opportunities, sometimes opportunities missed and whatnot. Let's fast forward to kind of the market today, because yesterday in the market, I think Twitter was hashtag Bloody Monday or Black Monday. It should have been Bloody Monday is what it should have been. But
it should have been Roller Coaster Monday.
No doubt about that. Jim, in terms of that movement, in terms of the markets, when you see the markets behave like this, what is your thought process from a trading perspective? Do you approach your game plan any different when the market's very, very volatile like it is today, versus some of just when it's like mundane selling credit spreads?
Well, I mean, you know that one of my primary strategies is credit spreads. Whether you do that weekly or monthly, it's a great cash flow strategy. And even in the roller coaster ride that we've had, Friday, Monday, and even today, my credit spreads are out of the money, so they're relatively safe. You win that 9 times out of 10, so it's a great system. Where I see opportunities when you have the high volatility here is really taking a look at, playing the E-minis or the futures. So when I see that kind of movement, either overnight in the overnight marketplaces, or you see you break a support or resistance level, or you have a trading system, I think the opportunity is really to play the roller coaster ride.
Yeah.
Rather than that mindset of long-term buy and hold.
Yeah, Jim, I was yesterday. We did a podcast yesterday on Black Monday, but I was primarily in the options market yesterday, and had about 15 trades on. About 7 or 8 of them were credit spreads, and I'm going to tell you right now. And Thinkorswim was having some problems technology-wise. Don't get me started on that again. But I was just having a very difficult time unwinding my positions, because you sell less delta than I sell, which means on a day like yesterday, I had a lot of management I had to do, and it was just very, very difficult. And so today I did exactly what you just said. Today I switched. I was out of most of my trades yesterday, and I switched to basically just day trading in the futures market. And it was easy as pie in terms of getting in, getting out, trading it directionally. And I think that's an important point, because you've been around this market for a very long time. You've been a trader and investor for a very long time in many different marketplaces. In your estimation, how important is it to not only have a trading system, but have multiple different ways to approach the marketplace?
Oh, it's critical. I mean, I like to have cash flow. So spreads for me, mainly on indexes is where I usually play, mostly on the Russell. But that gives you regular cash flow. But if you have, major shifts in the marketplace, you can profit directly from the uptrend or the downtrend.
Yeah.
Which means you have to have the flexibility to walk into that marketplace with some sort of system. Whether it's moving averages or support and resistance or an indicator or whatever the system may be. And when you have major trends, that's where you can make some major.
Absolutely.
Money. I know Keith. One of the investors, right? And he and I had a conversation about 6 months ago, and he said, when you're playing futures, how often do you play? And he was looking for me if I play every day, and I said, well, maybe it's 2 days, 3 days a week. and I'm looking for those major movements on the futures side of the direction, and staying away from the days where it might be going sideways, where it might be better to do a
Yeah,
credit spread system.
no doubt about that. Tim, we've known Jim now for a few years, and what an absolute inspirational person and story. And I kind of want to get into his story. Jim, you're a motivational speaker, you're a public speaker, you're a trader, you're an investor.
Let me throw in one thing.
Go ahead,
quick, Matt. Well, one thing I want to say before we move past it, and I think that the lesson for everybody out there to understand is that by learning multiple products, you can take advantage of different conditions in the market.
Yeah.
Listening to Jim and you talk about this, I mean, guys, if you're out there and you have a system, great. Now, if you can take one more step to add something new to that system, it might be learning how to trade a futures contract or a Forex pair or something like that. Jim and I were speaking before the podcast, Matt, and we made the point that, the most liquid products when the market's open and we're crashing were futures and Forex yesterday. And so if you're, if you identify that and realize that when you're in a market like that, you want to have access to the most liquid products, you probably need education in that regard. But I agree. I do. Go ahead, Matt.
And I certainly want to say something about that, but I want to hear Jim's point on that.
Oh, I was just going to say, I mean, you were talking about you were trying to trade options yesterday. And the spreads on the ask and the bid were probably
Jim, they were ridiculous. on a $10 option, they were $2.50, and we're not talking about illiquid stocks with illiquid options. We're talking about 15,000 contracts being traded at that moment on that moment. And it's ridiculous.
And the market maker doesn't know what the hell's going on, so he's going to try to price it so he can make money on both sides, right?
Well, and I was talking to Gino. I was talking to Gino last night, and they instigated Rule 48 in the options market, which basically will shut down trading every now and then due to the volatility, and then they shut down the VIX. And once they shut down the VIX, it's impossible for a market maker to accurately price in an options contract. And it just made it for a nightmare situation yesterday. And having the ability to navigate that yesterday. And I came out with a slight profit yesterday. I didn't make a lot of money because I was multi-directional yesterday. But if I didn't have this multiple ways, systems, experience, and whatnot, I would have got crushed yesterday. It would have absolutely got crushed. But and to me, I just keep coming back to this, and my whole thought process is, because every one of us, all three of us, we have years and years and years, if not decades, of experience in teaching other people how to trade and public speaking, and we've met so many people who just say, "Oh, I'll just go learn from YouTube," or "I'll just go to a website," or whatever it is, and you're just thinking like, yeah, in a bull market, you can go throw a dart at the Wall Street Journal and win, but it's really, the people that invest in themselves, the people that invest in education, that go to Master Trader and Options 1 and Options 2 and Focus Forex, and they mentor with somebody like Tim or Gino or Noah or Keith King or any of the amazing legacy mentors out there. It's those people that put themselves in a position yesterday to succeed because they have that experience and they have the wealth of knowledge that they got from their mentor. And it's days like yesterday that really prove the power of education, system, and surrounding yourself with people that have the experience, that have been in these situations before. Like when you were talking about the flash crash in 2010 or trading in the bear market of 2008 or 2000, that experience is invaluable. And to people, and I just want to be very clear on something, for people who think you can go into the market that is dominated by speed and volatility and high-frequency traders, and if you think a couple of videos on YouTube is going to get the job done, it's going to get the job done to a level of making you lose a lot of money.
Well, it's going to get the job done for the guy on the other side.
Exactly, for you, for me.
They're going to make all the money.
Exactly.
The amateur is going to lose their money. The professional is going to win it, and it's usually because they have that educational system, or they have that mentorship or the coach or somebody to help them through those tough times.
Absolutely. I was doing some math yesterday, and our equities market is about, including the options market, is about a $15 trillion market total equity value. And it's when you talk about it's the professionals on the other end of the opposite of the transaction. It's the market makers. It's the educated folks out there. 1.2 trillion dollars exchanged hands yesterday and today. 1.2 trillion dollars in 2 days, and I'm sure although there's a lot of people that are worried about their 401ks and their mutual funds. There's a lot of other people dancing a happy dance over the last couple of days. I got to tell you something real quick, and then we'll shift topics. There's a girl I know on Facebook. Her name is Michelle, and she wrote a Facebook post concerning, and she posted a picture of the market, and she's a real estate investor, and she says, just want to get people's take on the market today. And there's a couple of people out there who said, yeah, my 401k is really got beat up the last few days, but I really hope it comes back. And literally, Jim, I wrote, hope is the worst strategy in human history. It will make you lose money. If you don't educate yourself, you're going to lose even more money. And Michelle comes on, she goes, I'm sorry Matt was so blunt, but he really does know what he's talking about. And the guy writes back, says, no, I appreciate people who are blunt. My money's important to me. And, it's important to all of us. So let's go out there and let's protect it, and let's do that first by education and knowledge, getting in a master trader and whatnot.
Yeah, well, I mean, just simple things too. I mean, if you're in a retirement account, self-directed 401k right now, and you haven't considered, something like a protective put, to hedge against the down potential piece, which we've seen a couple of days of that already, and you don't know what a protective put is, you're at a major disadvantage. There's a good chance you could lose 30 to 60% of your account in the upcoming months.
No, I completely agree. Like last week, Jim, I have some covered calls out there on some stocks that I plan on owning for a while, if not years. And they're stocks I constantly just write covered calls on. And because, the name of the game for people like you and myself and Tim, it's all about cash flow, right? However you cash flow that's the name of the game. And, whenever it breaks support, you've got to add the protected put option to it so that you don't lose your shorts, right?
Absolutely.
You talk about the protected put option on retirement accounts, and that's a strategy that whenever I'm doing a 3-day basic for legacy education, that's what I'm always, that's my entire message is protection. And I've been talking about this for literally a year now in terms of understanding the risk in the marketplace. And, I was telling Tim yesterday in the podcast, one thought I had yesterday was, I just wonder about all of those people with significant retirement accounts over the past year that I've spoken to that told me, quote, education is too expensive, that classes are too expensive. And I'm just thinking, in the last 3 or 4 days, you've lost more money than if you would have just basically learned one strategy. If you spent $30,000 to learn one strategy, you've lost that in the last 4 days.
It's not just that, though, Matt. You've been preaching and teaching that for the last 6 months to a year.
Yeah.
But, the writing's been on the wall for the last 6 months, hasn't it?
Oh, absolutely.
You look at the charting patterns. You've had double tops, triple tops. You've had support and resistance being pressed and then dropped and pressed and then dropped. You had the Dow, a week ago, have the death cross.
Yep.
And death cross is kind of a hint, right?
Well, all of this leads to a conclusion. It's like, I have a legal law background, and it's like the evidence at some point becomes overwhelming. From what you were talking about with double tops and triple tops, and if you just track the market over the last 3 years, in 2013 it went up 30%, 2014 it went up 12%, and this year so far it was going up 0, and now it's getting butchered. That's called slowing momentum, and it's for a reason. And the key technical patterns out there, from the double tops, triple tops to the breaking of support, the evidence is absolutely overwhelming, and that's even before talking about how the average market cycle from top to bottom and from over the course in the last, since 1929 has been very consistent at 7 years, and we're right at 7.5 years in this bull run. And it's sad that people will not put forth the effort for their own gain.
But I think part of that too, Matt, though, is that they perceive that the experts or the talking heads on CNBC,
CNBC.
or
Yep.
Financial Planner or whatever. And, I was watching this morning as a number of people tried to explain the last couple of days, and it was interesting to listen to the managed account people, the fund people, and their take on things. And it was, well, you buy on the dip. If there's a correction of 10%, that means that Apple and Netflix are at a good price, and you should buy them because their PE ratios are X. So you're getting this message from the quote professionals, and you know this, Matt. I have had all of my financial licenses in the past. Don't currently have them, but the reason I got them was to learn about the market. And what I found very intriguing was that the first several tests, there was no mention of the market. You didn't talk about a stock. You didn't talk about a moving average. So how truly professional are they? They just want to keep those monies in equities and mutual funds.
Yep.
And that's the message they're passing on to everyone. Yet when we look at the market, we're going, geez, there's a good chance that the market's going to continue to be bearish, and we need to be playing bearish strategies, or strategies that are neutral.
Well, and you take it even a step further, Jim. When they talk about a 10% correction, they're talking about that over a month, 2, 3 months, right? What you don't do is buy a dip against an 8% drop in one day. You don't do that. That's like stepping in front of a Mack truck and thinking you're the one that's going to survive.
And you've got
absolutely
seasonal
crazy
patterns kicking in right now, which September tends to be a bearish month. So yep, absolutely.
Worst month of
and you got people giving advice like now's the time to buy, and I'm going, oh my God, how professional are you?
It's insane. On Twitter, there's a Goldman Sachs put out their on the Dow 30, okay, and they didn't have one sell rating on the Dow 30, not one, and most of them were buy ratings. And I just said on Twitter, I wrote back, I said, at what point and at how many trillions of dollars in consumer losses do we have to see before you would actually recommend somebody sell?
They moved them to neutral.
Exactly. You don't want to buy more, but still hold. It's insane.
Let's call it like it is, though, guys.
But
let's call it like it is. Those people don't have any respect for their consumers. They think that people should never do anything on their own, and that they literally should just hope for the best long term. They view the public as people that are unable to take action. I mean, that is. I mean, if you went to a bar and had some beers with the guys from Goldman Sachs, they would talk about mom and pops, that they're inept. They treat them with disrespect.
Yeah, I actually saw an article, Tim, that it's from about 5 or 6 years ago, and I wish I could remember the title of it, but it was one of the major brokerage houses that basically said, we profit on the ignorance of the mom and pop investor. And we don't want them to be educated, because if they did, they would realize there's better options out there.
Well, and Jim, Larry Fink, who runs Blackrock, one of the largest institutions in the entire world, basically said last year in an interview with, I believe it was CNBC, basically said that the American consumer will never put forth, he said the only reason we are in business, meaning Blackrock, who runs other people's money, is the American consumer will never put forth the effort for their own gain. And, that's the entire mindset of Wall Street, is that the American consumer is dumb, they're complacent,
but they don't have to.
They're just basically, they need us. No, I agree with that. I don't agree with what Larry Fink says to a certain extent, because if an educated consumer, an educated retail investor can outperform the market, can outperform the mutual funds, simply by putting their money in the spiders. It's really as simple as that. You put your money in the spiders, you write a covered call against it every month. You have to protect the put option when the market breaks down, and you're killing you're killing Wall Street fund managers if you learn how to do that. And that's not even that hard. But I want to take it to a different step, because you are what I would consider an absolutely expert at the consumer mindset, the investor mindset, the differences in the two. I want to talk about why it is that some people simply, for one reason or another, even when they are presented the opportunity to learn how to do this, why is it that they can't move forward? What stops the consumers from achieving their fullest financial self?
Yeah, I think it comes down to two or three things, but two pop out for me kind of immediately, and that's the voices that they have in their head that tell them they shouldn't be doing it. What I mean by that is the cultural voices, the financial voices that say, you should buy and hold. You should look at the long term. You should put it into a 401k. And culturally, those voices, either on TV or live or with people, have been wired into our head. So when we have that other thought that I can do it myself, it's foreign to people, right? I mean, trading is not hard. It's just different, right? I think you make that statement regularly, right?
Yeah, I say trading's not hard. It's new.
Yeah, and it's changing that mindset of trusting somebody else with your money to you trusting yourself with your money. And then the second big thing I think that pops up for people is the fear of the unknown. The fear of, geez, I'm not as smart as those guys, and they're not doing that well, right?
Yeah.
And I think what that many people don't realize is, it takes about 8 hours to go through training to get a series 63, 64, 65. A few more hours, you got to get a 70% on the test. They don't talk about the stock market. How smart are they than you, right?
They're not. They're not. They are you. They just spent the 8 hours to learn how to take a test.
Yeah, I was amazed when I got my financial license how simple it was, and then I was more amazed that, geez, we never talked about a moving average, we never talked about a stock, we never talked about support and resistance. All we ever did was talk about the Securities Act of 1933 and 39, and I had to get a 70 on the test. Now I'm a financial advisor, and I can tell somebody where to put their money. That amazes me. I would have expected that there's 1 or 2 years of mentorship and coaching and training and multiple tests before you were allowed to tell somebody where to put their money.
So Jim, when I went to law school, 7 years of education, $100,000 in debt, 7 years to become a lawyer, but it cost $200 a day and a half to run money.
Get a license. Yep.
It's
and then the strategy, Matt, is even worse. The strategy that everybody falls into there is, and you got to appreciate there's good financial planners and bad financial planners, but if you have only one place to put the money, you don't have flexibility or choices, and their only place to put the money is in a buy and hold strategy. Let's put it into a mutual fund and an equity fund where it's going to sit there for 5 or 7 years. Well, when you're in an uptrend, everybody looks like a genius, but when you get into a downtrend or a sideways trend, they don't have a place to put money, and they can't even make a change.
No, they don't even know how to. I mean, Jim, they don't even know how to make that change. They're socialized in the same capacity, and I've always said this. What separates true traders from everybody else is sideways and bear markets. That's what separates the haves and the have-nots, because like you said, in a bullish uptrend, it doesn't take a rocket scientist to click the button.
But even then, they can't beat the S&P, right?
Yeah, even then, 90% of them can't even beat the S&P, and that's absolutely amazing to me. And even though some of their mutual funds are allocated directly in the S&P, they cannot beat the S&P because they have to charge fees. That's insane.
I remember 2007, 2008. In 2007, 2008, you had the death cross happened on the Russell, it happened on the SPY, it happened on the Dow. And I'm talking to my parents up in Canada, they're divorced. I'm talking to my mom, talking to my dad separately, saying, look, you need to take your retirement account, go to cash, right? Or get it out of the market, go to some sort of fixed fund, or, get it to cash if you can. They talk to their financial guys, and their financial guys say, no, you need to keep it in there. Now, they've been with their financial guys for a number of years, so they leave their money in the markets. Well, both of them lost over half of their account.
Yeah.
Months later, I get the phone call. Now, what can I do? And I'm
You
going,
should
well,
have done something then,
if you
and
don't if you don't take action in this marketplace right now to protect your downside, you've been warned, right?
yeah. No, I mean you have, and at the end of the day, yeah, I've said this in the past. After this market crashes, you will have people, and many people out there, blame Wall Street, blame the central bank, blame government, blame corporate America, and you know what? Maybe they play a role in this, and they certainly do play a role in creating bubbles. There's no doubt about that. But you don't have to follow their advice. You don't have to make a choice to say, well, I'm going to do what they tell me to do, and then I'm going to blame them when it doesn't work out. You have an opportunity to buy insurance. You have an opportunity to go to cash. You have an opportunity to invest in yourself. You have an opportunity. In fact, I'll be in L.A. County this week, and I'm going to be speaking to a wonderful group of legacy education and students, and I'm going to be telling them you have an opportunity right now to take advantage of this. You don't have the time to procrastinate. You don't have the time to say maybe tomorrow. You don't have the time to say I'm busy. You have the time right now to control your financial future today, and in a year from now, put yourself in an infinitely better position financially for the rest of your life. And for those people that have the courage, and I truly do mean that, for those people that have the courage to move forward with their financial knowledge, they will never regret it. They will never regret it. Because because when you educate yourself, you become aware of so many other opportunities in life, in business, in real estate, in trading, whatever it is. I do want to talk a couple things here, Jim, just kind of how you got into all of this, because the listeners of the podcast, they know Tim and me very well, but we like to hear other people's stories.
Sure.
Jim, how did you get into investing in the first place?
Well, I kind of have the story that a lot of people have, and I started investing when I really didn't know anything. So I worked for Rogers Telecommunications up in Canada. Great company, billion-dollar kind of company. I was in the executive ranks, and kind of through the grapevine, I'd learned that Rogers was going to have one of its best quarters ever. And this is before I knew anything about insider information or anything of that nature. I happened to be playing hockey, a buddy of mine having a beer after playing hockey, because in Canada you're obligated to play hockey and have beer. And afterwards we were talking, and I mentioned this to him, and he's a broker. So he said, well, if you played some options and you played the call side, which I didn't even know what call was at the time, there's a good chance that you could, increase your portfolio significantly. So I took $7,000 of money that I had saved over the years, put it into a short-term call, and I'm talking like 3 weeks, less than 30 days. Didn't know the difference between a short-term call and a long-term position. Rogers comes out with its announcement, and at the same time, the market crashes and burns. Well, Rogers dropped dramatically. I lost half of the money the day that the announcement came out. Couldn't get a hold of my buddy on the phone call to find out what was going on. Didn't know that 70% of a stock's value is directly related to the overall marketplace. And then that option expired, and I didn't sell out of it, so I lost the other $3,200 of the $7,000 because I didn't know that options expired and decayed. So I got a $7,000 lesson. And when I got that $7,000 lesson, I decided that, that was pretty expensive, but knowledge was more important. So I actually started to invest in books and education, and I spent about $81,000 on books and education, half of which has been in the stock market. And then just started learning systems. The first system I learned was, the CanSlim system, the William O'Neill system. Did fundamental systems with, Buffett and Graham, those kind of concepts, and then got into technical trading. And as I got into technical trading, I learned more about options, and eventually did covered calls for, about a decade, because it's such a great cash flow strategy. And about 10 years ago, kind of fell in love with credit spreads. So one of my main pieces, over the last 10 years is monthly cash flow from credit spreads. High probability, good rates of return, no guarantees, but very consistent over time. And it's a strategy I teach all the time to everybody I meet.
And a credit spread, and many understand what a credit spread is, but I want to ask you this, because you sell very low deltas, very high probability, usually on a market index like the Russell 2000. You've been doing it for 10 years. In terms of that, just one strategy, just that credit spread on the RUT for the last 10 years, off the top of your head, how many times do you think you've been profitable on that trade, percentage-wise?
Well, I always say that the average person can win 9 times out of 10. My winning percentage is higher than that. And in fact, I've got the last 3 or 4 years where I haven't taken a loss on that monthly system. So it's a very high probability. I tell people that if you know nothing, it's 9 out of 10, providing you're playing a system with rules. But it can be much higher than that. So very high probability, good rates of return. The ex-financial planner in me will come out now. Past performance doesn't equal future performance. Investment has risk.
Yeah, I love the disclaimer there, Jim.
But it's a very half. And you're earning on average 6, 7, 8% per month. Those are good rates of return with high probability, and again, no guarantees, but it's pretty consistent. In fact, it's the first strategy I teach my kids.
Yeah.
My kids turn 16. I get them trading credit spreads because it's monthly cash flow for them.
Well, I know Michael very well, and he comes out on the road with us to help us teach other people how to do this same thing. And he's 24 years old today. And I always bring him up, and I said, you know what? This kid, Michael, started trading at 16 years old, and at 24 years old, he not only knows more than most financial advisors, wealth managers, he outperforms them every single month, every single year, and he's 24 years old. And it's amazing to me that at 24 years old, here's this kid who most kids at 24 years old, they're worrying about, oh my God, I can't find a job after college, and I have a lot of student loan debt, and I have to go work at a job I don't want to do. And there's Michael.
Well, there's a funny story to that too, though, Matt. He graduated in June, right?
Yeah.
So he's been trading, and he pays for his car, he pays for his rent out of his trading, and out of what he's been doing for the last 8 years, right?
Yeah.
So when he finishes up school, I say, so what are you going to go get a job? And he looked at me and said, "Do I need to?"
No,
but just think, if you got that extra money, then you could put more money into your trading account. You could build it bigger. You could have a better payday. So he hung out for 3 or 4 months, not doing anything before he ended up working with Rich Jad. So.
Well, I'll tell you.
I got one more thing to tell you
that's
interesting about that. So he's hanging out with you on the road, right? And I asked him about 3 or 4 months after he's been doing it, so what's the most important thing that you've learned out on the road, with Matt and with other traders, because you've got great traders on your team like, Sandy and Bo and all those, and Tim and all those guys.
Yeah.
And he said, well, the most important thing I've learned, Dad, is I don't want to be 55 and come into one of these.
It's true. It's sad, but it's true. And, I constantly tell people, because, it's important to surround yourself with a team. And I met Bobby Shannon about a year ago, and I said, listen, the best way to learn how to trade, Bobby? Just come out with us. Just come out with us. Surround yourself with us. You'll learn how to trade. And you know how much Bobby's made this week trading, Jim? And he's pure directional and pure bearish. And he's pure bearish because last Thursday I called him and I said, buy put options on IWM. He's cleared probably over, $8,000, $9,000, $10,000 this week trading, and this is a guy that literally was in mutual funds 6 months ago. And
and believes that mutual funds were important,
we're the way to go.
I had conversations.
It's amazing what you can do when you surround yourself with system and team and so on and so forth. And listening to you, Jim, and you've been an inspiration to me and Tim in our journey as an investor, as an educator, but more importantly in how we present to other people and inspire them to move forward with their education. So publicly, just want to thank you for that. You You guys have been listening to the Trading Justice podcast presented by Tackle Trading. If you want to learn a little bit more about trading, guys, we do events every single week around the United States. I'm in LA this weekend. Tim, I believe you're in Phoenix in a couple weeks. I'm back to LA in a couple weeks. Guys, Jim, if people want to attend one of our trainings, how would they go about finding out where we go and how they can enroll in one of our trainings?
They can find it on the website.
Yep.
Right?
LegacyEducation.com, RichDadEducation.com as well.
Perfect.
Awesome. Jim, thank you so much. Tim, final thought, and let's get out.
Well, just listening to the entire conversation, it's a reason why I am so passionate about building our team, Matt, quite frankly, why I like going around the country and meeting people like Jim and working directly with you, my brother, for 10 years. Because as we move forward into these complicated markets, you didn't hear 1 ounce of any of us nervous about it. And that's because we have a team, and people like Jim, people like yourself, we're here to help those people out there that are listening right now, and I want them to understand that there's real power in knowledge, and there's real confidence that you can get from education. So kudos to that. We're out. Let's do some good. We'll see you guys later.
Next time. Thanks, everybody.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.